Hey guys, Mike here. So, oh boy, what a roller coaster is going to be this week and tomorrow. Boy, it might get ugly. As you might have saw Friday, the market reacted when Trump announced the tariffs would go into effect on Saturday. Well, now they've gone into effect, and now the market has to react on that, plus the retaliations that are being put on us as well from these other countries. And so, what is the market not like? Uncertainty. And so in this video, we're going to talk about a couple of things. One, we're going to go over tariffs because a lot of people have no clue what they're talking about. And I'm telling you right now, I'm going to set the record straight on that. Two, we're going to say, look, we've kind of seen this before. We've seen this movie. So I'm going to show you real quick how it played out before, and it might surprise you what happened. And then what the safe havens were back then. Will those be the safe havens now? We will have to see. Okay, that's what we're going to find out. But I will say this. If Friday's reaction and crypto's reaction over this weekend is any indication of what these futures are going to open up as, is going to probably be pretty ugly. And what's funny is, if you look on Twitter and what people are searching right now, there's a term they're searching: circuit breakers. I haven't heard that term since 2020. But buddy, that's when the market drops really fast. And there's these circuit breakers put in place to stop, where the market will drop really fast at a certain percentage, and then it'll freeze. This happens to stocks all the time. And so the fact that people are searching that, and the fact that it's like all over Twitter, oh, what's the circuit breakers here? Here's what the circuit breakers are, kind of makes me chuckle in a way, to be honest with you. But again, we've been here before. It's just uncertainty. The market has to digest it, because when it comes to tariffs, I'm telling you, nobody has a clue. I have read research study after research study about this, trying to figure this out, because I knew it was coming, right? We all knew it was coming, and we've been through it in 2018, and trade wars freak the market out for a while, and it has to digest it. But, you know, they say, oh, the price is going to go up. And then when you look on some items, that is true, right? When look at facts, here's just facts. In 2018, when tariffs were put on steel prices went up. But then after tariffs were on there for a while, the steel prices started coming back down. Same thing happened to wash machines. Same thing happened to other things, right? And you won't feel the effects in the economy for many months. The other thing the market don't understand or don't know, right, is if this is just a temporary thing, is this a negotiating tactic, or is this something that's going to drag out like it did in 2018 for over a year? That's the big thing. On top of, what are we sitting at right now, which we'll talk about in this video, we're sitting at much higher 10-year yield. We're sitting at a much higher Fed funds rate. Okay, we're sitting at, guess what? The free money from Japan is going down, because now the carry trade's off the table, and so they're raising rates. And so that's a whole other thing that has to do with liquidity. And so this is the thing the market has to digest, figure out. But what does the market like to do, right? Once it is, same thing, we got this crazy reaction coming out of China for their little, AI thing, and the market just plummeted, and we thought the world was coming to an end, and massive bounce back from that. So we'll see, and that's what I'm telling you. Watch this video, because I'll show you 2018. It was rough. The one thing everybody agrees on is that it's going to be volatile. We know that. Because you can guarantee, I would guess housing stocks will probably be down on Monday, because we get a lot of lumber, building materials from Canada. Probably autos are going to suffer, because they import a lot of stuff. Even Tesla imports 15% of its inputs that go into their cars from Mexico, that kind of stuff. We got to figure out what's Europe thinking, what's China's thinking, all that fun stuff. And so that's what we got to figure out. Plus, we always know the X factor is what? President Trump put a tweet out tomorrow saying, all right, we're not going to do any more tariffs, or we're going to decrease this. And the next thing you know, the market goes crazy. Already puts out a tweet saying, I'm going to increase the tariffs, because he said if the other countries retaliate, then there's going to be even more repercussions on this, okay? And so it's going to be interesting, to say the least, okay? Now, let's go through this really quickly and what happened. In 2017, they're talking about a trade war, a lot of threats, and then here we go. January 2022, the first tariffs get put on washing machines and solar panels, not just from China, from everywhere. And then, of course, what else happens? Here we go. More tariffs, months after months. Then what happened? China retaliates. Now, I don't see Mexico or Canada even involved in this, right? This is just between us and China. Now you have 3 countries we're dealing with. Then you got more tariffs. Here we go, blah, blah, blah. China retaliates again. And when you look at the chart on the SPX or the SPY, you can see, it is volatile, man. Big drops. These are big swings, 10%, 5%, 10%, 5%. But if you look, the market finds its footing, right? If you look, that is an uptrend right there. Starting in April, even though all that's going on, SPY went up 13% before crashing. All right, and it crashed at the very end of the year. Remember, the Fed was raising rates from 0 to 2.5%, ran off the balance sheet by about $700 billion. That's peanuts compared to that, but that's what was going on. What happened during that year? The dollar took off. All right, dollar takes off. And again, we'll get into Friday's reaction, so a little bit of the same thing, right? But the dollar takes off. Then you look at the 10-year yield, and it goes from 2.3 to around 3.2. So not even over 4, right? You see where we're at right now. Again, we're getting all this. So 10-year takes off, dollar takes off. Here we go. But what's surprising is look what didn't do that bad. IWM, right? Looked bad the first part going through May. But when you look, I mean, starting there in like April, once again, you start going to an uptrend and it starts to move up, right? It ends up, even with a sideways action, up 10% before the crash. That's really surprising. You would think IWM would be in the toilet with all this going on. But no, it didn't. But what I tell you about the 10-year, especially now, it depends on, one, the massive move it makes and the level. This little box right there is the 4%. Lately, over the last year, year and a half, when we get above 4% start to take off, you know, especially IWM, high beta stuff does not like it, okay? You look at 2022, boom, it was going through the roof, even though, you know, the market's in there crash and everything. They thought there was going to be a recession. There was not, okay? We were way higher than we were in 2018. You can clearly see, what are the safe havens? It was some of the Mag 7, if you want to call them that, like Netflix, for example, absolutely skyrocketed, right? Because you would think tariffs aren't going to affect it. You look at Apple, you would think Apple would be affected because all the overseas revenue getting actually decreased when they go over here and do the transaction back in American dollars. But again, it's Apple. So what happened? Ends up going up 43% right there in 2018. You go over here to Microsoft. Again, here's another one, software and stuff, right? Ends up going up. So there's going to be safe havens. Are they going to be the same ones? I don't know. Remember, in 2018, Tesla was not what it was today. And it didn't do well. It was so freaking volatile in 2018. It was crazy. NVIDIA was what NVIDIA is today. But it might really surprise you, shockingly. In 2018, NVIDIA did really well. And so again, how is the market going to react? We know in 1-2 days, we know how it's going to react. Probably going to be pretty rough. But we got to wait and see because you don't know if it's going to be drawn out for another year and we're going to go to a really big trade war. The fact we're in up against multiple countries this time in the trade war is a little different. It was all about China in 2018, and now you're talking about obviously Canada, Mexico, and China. I didn't see where he had put any on Europe yet, but who knows? Maybe they'll come into the fray as well. We'll have to see. And so again, that's what we're going to have to find out. That's what the market doesn't know because when he was asked this weekend, is there anything they can do to get you to take them off? He's like, no. He's like, we got a deficit to them. We got to make it equal. Right, that's one thing. The other thing they were talking about was drugs and stuff like that, which, I mean, in the border and all that fun stuff, but that's a whole different story. So, where are we at today? You look at today, you go to the SPY. Obviously, you can see the reaction on Friday in case you missed it. I mean, there's where the news came out, and boom, 1.31% down on the SPY right there. The Qs, which were up really nice all day. I mean, the Mag 7, all of them were just roaring. And man, they end up dropping. QQW was up 1.7% drop. IWM got hit the worst because the 10-year just took off like a bat out of you know what, almost 2% drop right there. Try to recover a little bit in the day, but nothing was happening at all. You go over to IWM, obviously, hello, my old friend right there, back in this range right here. But that's where it stopped Friday. If we open up, blood red tonight, where are we going? That's the bigger question. So now we got to start marking out gaps. We got to figure out where the discounts are. Like even in these big drops, you go into a discount range somewhere in there, start hitting major moving averages. Normally you get a bounce, whether it's temporary. That's what we got to find out. And we'll go over to SPY here and start working this out. So we'll draw our fibs, figure out where the discounts are. Anything below 0.50 is considered a discount. And so if you look, let's say we open up 1%, 1.5% down, that puts us right around that 50 fib right there. So we still hadn't reached the gap below, but there is a gap right here. Okay, there's a small gap that did not close. So there's multiple gaps. So now we get to start filling gaps if that is the case. Again, I can't predict it. The futures aren't open right now, but it looks like that's going to be the case. And we don't know what's going to happen overnight and what the European session and Asian session is going to do to us. So anyway, you can look at the SPY right here. I got it marked out. That's where the 0.5 fib is right there. And so we'll see if that's where we come down to, or we open up even further down. You look over here at moving averages. That put us below the 50, the 100s right there as well. Pretty far below, down around the golden pocket area. And we'll go over to the Qs, but one thing to keep in mind, remember, the SPY actually set a new all-time high. The Qs did not set a new all-time high. Remember that? We talked about it. They actually set a lower high when it came back up and then started to sell back down. So this will be interesting. And we'll draw a trend line here because that's kind of what you can see happening right there. So when it comes back up, this will be resistance now coming back up right here. But you can see nice, 1, 2, 3, 4 times it hit this right here, right there. And so now we get to figure out, okay, where we're going to open up at, how much blood does the market actually want when it's trying to reprice everything? That's the big thing to think about. Because you might have saw Apple, right? Apple popped on earnings and just sold off like crazy the other day. Now we come down, if we're down 1.5%, there you go. Might be worse, around 514, 512, somewhere in that area. There is a gap down below, right there. And so we're going to mark that out. We'll sit here and draw our fibs up. And you can see, the golden pocket right in between those two gaps. 0.5 is right below it. You look at the 0.79 fib right there. It's down in that bigger gap below right there. I'm just going to take it from there. So that's your discounts, anywhere from 515 down to like 505, somewhere in that range. But I will shade this out because there is a daily fair value gap right there, that 5 fib. And so, a lot of this depends on where we open at. Obviously, all the stuff above will be resistance as we start to do this. And like I showed you in 2018, you can try to predict it all you want. But, 2018 kind of gives you that roadmap to say, well, it was volatile, big bounces, big drops, all that fun stuff, right? And so we'll pull up the IWM, another big gap right there. If it breaks this area, that puts 1.5%, 2% down, puts that gap right there back in play, right? Will put us into a discount range as well. So no surprise on that one. And we pull the fib down on this one from that swing high. We'll go all the way down to the big low down here. You can see that big pocket, that's 0.5 to the golden pocket is where that gap is, if that happens to be the case. And so you're looking at anywhere from 220 to 223 right in there for a discount. That's what it wants to give to us. And when we look at the 10-year, what was the reaction? 10-year skyrocketed. As soon as the news came out, we were sitting here up over 1.5% on the 10-year. And so the market definitely doesn't like that. Gave back some of it later on right there. You can see, but again, we're sitting here at 4.5 again. So we'll see if this is going to be another breakout for the 10-year, and this is what's going to happen. This was a catalyst for it to move up and finally hit 5, or is this going to be just a temporary thing and it'll start to melt back down a little bit? When you look at the dollar absolutely went parabolic. That, oh yeah, it loved it. Absolutely loved it. And the dollar, a strong dollar is good for certain things, and it's not good for other things. That's kind of the way to look at it, right? I told you, like emerging markets, if that dollar stays strong, moves up, emerging markets are going to be a freaking mess, okay? Yields keep going up. You forget, TLT and all the rest of those, IWM, you forget about it, all that fun stuff. And where's the safe haven is going to be? In the past, we know where it's been. It's been in those stocks that have a lot of cash, a lot of sway, a lot of weights in the indexes, okay? That's where a lot of that's been. So we're going to see if that's still going to be the case or not. And remember, when it's all said and done, or what happens on these tariffs, you can see it right here. This came out last week. America's where everybody puts the money, baby. Will America still attract the world's capital? Foreign direct investment in the U.S. has basically gone in only one direction for the past half century, but that may be about to change. Where else are they going to put it? I'm not really sure where they're going to put it at. You can see right there. That's it. We're the really only big game in town. Okay, I've showed you different charts showing about the same thing. But the other thing to watch too is going to be manufacturing, because manufacturing has been actually looking better in some areas. You see Dallas Fed manufacturing plus 14, and actually got out of contraction for the first time in a long time. And so we'll see if this is going to help it or not, because really the big reason given for this is trying to get manufacturing back in America. And, that's great and everything, but let's be real. We all know the reason why manufacturing left is because they can get super cheap labor overseas. That's why. And so you had to put like way higher tariffs than we got right now. I'm talking like 100% tariffs to get them to even think about it. Because just to build a manufacturing plant in this country, it's unbelievable. I mean, do you have any idea how much it would cost to build a plant here? I don't care what you do. It's too much. Plus the labor, we got to see it, right? In 2020, what happened? We had to hire Americans to do jobs that normally immigrants were doing. And then what happened? The wages went from like $5 to like $20 to flip a burger at one time. Okay. And I'm not saying people don't deserve to get that. I'm just trying to tell you, that's just reality. That there's a reason why these companies, even though they tried in 2018, it didn't work. They didn't come back here at all. And why do you think the foreign companies can come in this country, look this up and Google it, and like Russia bought the aluminum plant in Kentucky. There's a Brazilian company keeps buying all the steel mills and stuff. They bought a rebar plant right here in Florida, got one in Michigan, another one. And they're making them work when the American companies couldn't do it. You know why? They don't allow unions, and they pay way lower wages. Why do I know that? Because one of my neighbors is an engineer at that plant. And he worked the one in Michigan. He goes, I asked him, how the heck do you guys make it work? He goes, we don't pay y'all American wages. That's not how it works. We don't pay those really high wages they like to call them, because where they come from, whatever, $20, $30 is a lot of money to them. Versus here, they go, what? Because the cost of living here is so much more expensive. So and they ship in a lot of their foreign people to come here and work in those plants. So that's why they're able to make those plants work, and we can't. And so again, I mean, maybe it'll work. I mean, I want people to get jobs and all that stuff. I'm just trying to be realistic about it, though. Okay. Now, when you look at earnings, loaded. I would not want to be reporting Monday, but who knows? Palantir is about the only big one's going to report after the bell. They've been running up a lot. We'll see how that one goes. PayPal, Spotify, Pfizer is going to be 3 big ones. PepsiCo, Merck's another one. And then, of course, in the afternoon, you're going to end up with AMD, Google, Snap Incorporated, Chipotle, so some big ones, Enphase, Amgen. Going to be some big ones reporting. Wednesday, you got Uber, Walt Disney, and then Toyota's another one to watch right there. And then in the afternoon, you got Ford, Qualcomm, ARM. And then Thursday, Eli Lilly, Roblox, ConocoPhillips, Peloton, still can't believe that's in business. Hershey's, all about the chocolate. And then afternoon, Amazon, Elf, Cloudflare, Affirm, Fortnite, which my son just got into. Oh my goodness, those kids love that game. And then Pinterest also. And then Friday, not any really big companies to worry about on that one. But then data, got a lot of data coming out, right? Going to sit here and have final manufacturing PMI, ISM manufacturing PMI, ISM manufacturing prices coming out. And then we come into Tuesday. You're sitting here with JOLTS job openings. That's always a fun one. Factory orders month over month. Wednesday, ADP non-farm employment changes. Final services PMI, ISM services PMI, crude oil inventories. Thursday, challenging jobs cost year over year, unemployment claims, natural gas storage. And then Friday, the fun one, average hourly earnings month over month, non-farm employment change, and then the unemployment rate, as well as prelim, University of Michigan consumer sentiment and inflation expectations. So buckle up. You're going to be all over the place. Give me a prediction at the bottom what you think the market's going to be looking like the first couple of days. Please hit that like, subscribe button on your way out. Really appreciate everybody who watches and subscribes to this channel. Think about signing up with membership. Less than the McDonald's combo, and that's everything you get with it. And I'll see you guys tomorrow for another fun one.